𝗫𝗦 Technologies, a private Israeli medical imaging AI company, has been acquired by publicly traded RadNet. And we think this is an important deal. Here's why. In this video, we discuss our updated model and fair value estimate in light of the recent announcement. RadNet is a leading provider of diagnostic imaging services in the US with operations in over 30 states. It also owns 𝗘𝗫𝗣𝗔𝗡, a platform that provides AI-enabled diagnostics for mammography, ultrasound, MRI, and pathology. 𝗫𝗦 specializes in using artificial intelligence to enhance ultrasound diagnostics, particularly in early-stage disease detection. The company claims that its image analysis AI can automate and standardize ultrasound reports, which typically have high variability among different operators. According to 𝗫𝗦, its system improves diagnostic confidence by 20 to 40% and cuts scan time by 10 to 30%. These claims are supported by peer-reviewed publications. The acquisition will integrate 𝗫𝗦's advanced AI ultrasound diagnostics into RadNet's existing infrastructure of over 900 ultrasound units. In addition to breast and thyroid imaging, 𝗫𝗦's technology has applications in various other areas such as obstetrics, cardiology, and vascular health. The transaction is valued at approximately $117 million, including upfront cash consideration of $140 million and up to $30 million in potential future payments based on undisclosed performance milestones. We view the acquisition as positive for both companies. 𝗫𝗦 gains access to RadNet's large customer base, extensive imaging network, and experienced management team, which should accelerate its commercialization efforts. RadNet bolsters its AI ultrasound capabilities, enhancing its diagnostic offerings and potentially expanding its addressable market. We see this deal as part of a broader industry trend toward AI-driven healthcare solutions. The global AI ultrasound market is growing rapidly, expected to more than double over the next decade. Moreover, 𝗫𝗦's tools are approved in key markets, including the US, Canada, Australia, and Singapore, providing a regulatory tailwind for faster commercialization. This acquisition allows RadNet to offer earlier and more precise diagnoses, contributing to better patient outcomes, improved treatment adherence, and increased quality-adjusted life years. Additionally, AI's ability to reduce scan duration and reporting time by 10 to 30% should enable clinics to handle higher patient volumes while reducing costs. There are certainly competitive threats in the space. Dia Imaging Analysis, a Tel Aviv-based firm, offers AI ultrasound interpretation, but it appears to be more focused on cardiac and abdominal imaging, whereas RadNet has an enterprise-level offering with broader applications. Both companies could coexist, but we believe RadNet's clinical use cases are more established. Butterfly Network is another competitor. It offers handheld ultrasound devices powered by AI and has a partnership with General Electric. However, Butterfly's emphasis is on decentralization and accessibility through portability, whereas 𝗫𝗦 targets enterprise-grade scalability through integration into existing infrastructure. We think RadNet has several advantages. Its national footprint gives it immediate deployment potential and scale across a wide clinical base and patient population. And having previously integrated technologies like ICAD, RadNet has experience navigating such integrations, suggesting a smoother path to commercialization. Upon closing, RadNet intends to embed 𝗫𝗦's technology into its 𝗘𝗫𝗣𝗔𝗏 platform, aiming to standardize AI-driven diagnostics across all imaging centers on the platform. The company expects to prioritize clinical validation, reimbursement optimization, and operational workflow efficiency in the rollout. Based on our analysis, we project that the acquisition will contribute to mid to high single-digit % revenue growth for RadNet over the next few years. We also see significant improvement in earnings per share over the next 2 years as the company leverages 𝗦𝗧𝗢𝗏 AI to drive productivity gains and streamline operations. Reimbursement rates could improve if the technology's value is demonstrated through enhanced diagnostic accuracy and patient outcomes. Operational cost savings may also arise due to automation and reduced scan times. As of June 2025, our ND stock is trading around $58 per share. We see upside potential of 20 to 35 in the next 12 months, primarily driven by improved earnings expectations and increased investor interest in AI healthcare solutions. Long term, we are bullish on the company's prospects with a 5-year price target of $80 to $95 per share. However, this projection is contingent upon successful integration of 𝗦𝗦's technology, continued AI adoption across imaging centers and among payers, and favorable reimbursement policies. On the downside, our conservative risk-adjusted value estimate comes in at $55 to $65 per share over the next 5 years. This is based on a 12% discount rate, which reflects the risk associated with the company's core sector and uncertainty regarding the integration process, and a terminal value assumption of 15 times EBITDA. In summary, we view RadNet's acquisition of 𝗦𝗦 Technologies as a strategic move to strengthen its position in the AI diagnostic imaging market. The combination of advanced AI capabilities, a vast clinical deployment infrastructure, and experienced management team positions RadNet well for success in this rapidly evolving industry. Near-term upside is limited somewhat by integration risks, but the long-term opportunity remains significant if execution and market tailwinds align. What do you think? Comment below. We love hearing from you. To stay up to date on our latest research, make sure to follow. Thanks for watching. Until next time.